Hello ladies and gentlemen, welcome back to another episode in this public investment portfolio series. If you followed this channel for quite some time, you know that each month for the past year or so, I've been contributing to this public investment portfolio that I'm here opening on the Trading 212 app, which is the broker that I've been using for this series specifically. You can see that we're closing in on 996 euros. At the moment we're almost at 1000. And this episode is going to be a bit different than usual. First of all, sorry for this sorry state. As you can see, it's really late from the hour. We are at the end of the month. I haven't uploaded a single video, but my life has been super crazy. This episode is going to be different because for the first time, and it's almost, no, actually it's more than a year, I'm gonna not contribute any money this month because I didn't have that much time to research on these companies. Almost all of these companies are in the green. So I'm just increasing my entry price for these companies. If the market for the next couple of years always starts trending up, well, I'm missing here on a big opportunity. You should always stay consistent with that strategy. And always this disclaimer, as usual, this is not investment advice. I do me, you do you, always do your own due diligence. Don't trust this random guy that's here like talking in this really tired voice on this investment portfolio. I'm here to document just another episode to keep you updated on what's going on. Even though I have all my money here on the broker that I intend to do for the next month, I believe. Yeah, I almost have these funds. I don't know if I'm going to need this money in the near future. I've been having a lot of expenses, and I personally remember investing is always about making your life better, and you don't invest money that you can afford to lose. And maybe that now I'm in a position where maybe I should take things a bit more cautious. Maybe I start doing less contributions, or maybe next month instead of investing 120, I'm investing 240. You need to stick around to see what's going to happen. As always, I try to document this as much as possible. And you can see here the portfolios, you can see almost like a straight line, but it does not necessarily mean it was the return. It's just because I'm contributing each month. So normally the pie is going to get bigger and bigger, and especially because we are invested in a lot of ETFs. Actually, let me see here. 50% of the portfolio is in ETFs, so it's quite diverse. As I'm not exposed to a single company, let's say, unless the broad market crashes 50%, this trend is going to keep somewhat positive, but we don't know what's going to do. There's been a lot of crazy things going on with Silicon Valley Bank, for example, and I'm not sure about this environment. Actually, not understanding why stocks are going up. I'm a bit more cautious on my valuations, so I don't want to make a rash decision at the moment. I know the goal of this strategy always is to keep yourself rational, invest in the top, invest in the bottoms, but right now I feel like this is the right thing to do. Also, I'm not having that much time. It's already, I'm already at the end of the month, and I feel like, I'm going to just be investing just to make this video, and I feel like it doesn't feel right. I still want to keep my promise to you, so I'm keeping you updated on what's going on each month in, each month out. Hopefully it's just on an off topic. I'm intending to do a vlog this next month. Hopefully the month will be a bit better, and I'm better at time managing, I guess. I suppose this is the effect, but I've just been having a lot of priorities in my life, and YouTube is just one of the things on the side that I'm trying to keep as hard as possible this consistent. But then again, you can understand we are all human beings, and I'm here just making this video to update you. So let's have a closer look. The ETFs represent 50% of the portfolio. This is the distribution of the companies right now. And you can see here, like, these are very residual values. Actually, I was intending in the beginning of the month when I did my pie for this thing, I had already thought that I was going to invest 40% in ETFs, then 15% on Disney, 15% on Google, 15% on JD.com, Alibaba, and Baidu. I wanted to have a bit more exposure to China because I thought it were more, attractive investments, and Google was also trending now. Right now, actually, Google is down from my overall entry price, so I guess it wouldn't be that bad of a decision, but I don't want to rush it. Also, I would have to do this today, and then the orders would execute tomorrow, and then I would have to edit the video, and just like crazy. And then again, it feels like super rushed, and I feel like that defeats the whole purpose. I hope you can understand, and if you don't, I wouldn't understand why would you get mad. I'm just here documenting this so that in a few years I can look back and see, okay, Maybe I will look back in the future and be like, oh, this was the market bottom and I was so dumb for not investing in this specific moment. Or maybe it doesn't really matter because I will invest in the next month or in the next 2 months or whatsoever, and I need to make the slightest decision. Either way, I'm documenting it, so that's that, I guess. Yeah, I guess this is the episode for today. I want to keep things short and simple as usual, and I'll see you in the next episode. Thank you all, and I'll see you next time. Bye.